Hi everyone. Today let's talk about Beyond Meat. Beyond has announced several partnerships, two of which are with PepsiCo and McDonald's. Obviously, these are massive food companies and benefit the brand greatly. So let's talk about what that means for Beyond Meat. Then I'll talk about their third partner, Yum Brands, which is arguably the bigger of the three. Then I'll talk about some of the analysis and whether Beyond is overvalued or if it's a buy now. Then I will go over the charts. Then I will finish up with my current position in Beyond Meat. If you like trading stocks and options and making money, definitely like and subscribe. I cover everything from financial news to my personal portfolio as well as my active trading accounts. So make sure you subscribe so you don't miss out on any of my future content. Welcome to the Portfolio Bulletin. Let's get started. So let's talk about these partnerships. Beyond Meat started over 10 years ago, and their line can be found in over 84 countries and 112 different retail locations. And since its IPO in 2019, the stock is up 859%, hitting its all-time high just a few months later. But the question is it a buy now? They recently announced some pretty big partnerships, and before their earnings report, they announced the Pepsi partnership, where they said they're going to make plant-based snacks and drinks. Not sure what the drink part of that is or what exactly that means. But I could see the snacks being a thing. There's still very little information on what that means exactly, but if it's anything successful and it goes through the Pepsi supply chains, then it should definitely be profitable for Beyond Meat. Looking at their earnings, they did underperform earnings pretty badly, losing an adjusted 34 cents per share on a revenue of just over $100 million, which is up 3.5% from last year. The expectation was 14 cents on a revenue of $104 million, so they underperformed on revenue and earnings. And since this is a growth company, it does not look good that they're not growing their revenue as fast as expected. Growth companies usually lose money and don't post profitable quarters, but when the revenue is not growing as fast as normal, that is usually a bad indicator. Obviously, food service demand has impacted their business pretty heavily. They're kind of a premium meat brand, if you want to think of them that way. They're more expensive than just buying traditional meat. So anything that affects the economy, similar to luxury retailers, has clearly affected their sales. But analysts are now saying that their future growth is going to be fueled by McDonald's and Taco Bell's Yum brands. They say this is a multi-year partnership with the two chains, and they teased it last November, but it's now officially released that they will be partnering with both of these for the foreseeable future. As I mentioned before, they announced the PepsiCo deal and the stock jumped 20% as they plan to release healthy, protein-filled snacks. Then they reiterate the fact that they announced a partnership with Yum brands, primarily in Taco Bell, and then they're also expected to be offering the McPlant, which is McDonald's version of the plant-based burger. They also mentioned that they will be in CVS locations, which adds another 7,000 retailers to their repertoire, allowing them to reach out to even more customers. And then here's another thing that sets Beyond Meat apart, especially from Impossible: the fact that they sell meat in China, and they're expected to build a facility in China that'll allow them to supply that market more efficiently. As I mentioned at the beginning of this article, they are in 84 countries, which to my understanding, none of their competitors are nearly as diverse across the world, and they are doing a very good job of being the first to market. Next on the list of partnerships, they're also going to be in 650 Wawa stores, and they're also doing trials of their chicken in select KFC locations. And of course, KFC is owned by Yum Brands, and then Dunkin' is its own brand, so they're also partnered with them. Next, they also partnered with Yum China, which is something we already talked about. And then they also partnered with Alibaba in their Freshipo grocery stores. They expect to have a very strong foothold in Asia, and these partnerships seem to be supporting the fact that that is going to come true. As I mentioned before, they do have some competitors, like the Impossible Burger, which is currently partnered with Burger King, and hasn't seemed to expand beyond that. They are starting to get into more locations since the beginning of March 2020, which includes Walmart and Albertsons. And this is a brand I haven't tried yet, but I do expect to. Anytime that you can try a product from a company you're trying to invest in, it's always a good idea. And I'm curious to how Impossible compares in terms of taste and texture, because Beyond Meat does a pretty good job, especially in their meatballs, as well as the burgers. Something that I'm more concerned about is Tyson Foods trying to get into the vegan meat space. Tyson is obviously a massive company, and they have a lot of partnerships. And if they come up with a good product, there's certainly potential that they could take market share away from Beyond. But I'm not sure it's so simple because they, of course, have their legacy business of chicken, and anybody who buys Tyson is going to be thinking of those other meats. Whereas if you buy Beyond or even Impossible, you're buying a more pure brand, which is certainly a driver for consumers. If you're buying Beyond, especially right now at the high prices, usually you have some ulterior motive, whether you're an investor or you're an animal lover or you're trying to reduce your environmental impact. Currently, on a fundamental basis, Beyond Meat is way overvalued, but this is generally expected whenever you're buying a growth company. They always look overvalued on paper as they are trying to grow into their valuation, and they are priced on potential, which is why you see the stock jump anytime they announce a partnership, because that's how it's valued, and on paper it looks very expensive. Looking at their analysis of the technicals, it popped right after the announcement of their partnerships, and then it trended down since then, and it's currently below the 50-day moving average, and this is some things that we will look at later. And looking at their verdict, they say Beyond looks to be an outperformer in the long term, but it's not a buy right now because it's still going through its Pepsi-fueled gap up and has since fallen. Moving on here, let's hit some of the highlights of this article. They talk about a lot of similar products. They talk about a lot of the similar happenings in terms of their earnings as well as partnership announcements. But then they talk about the global market here, where they say total food service revenue did decrease by 42% during fourth quarter as the pandemic started to weigh on restaurant demand for meat substitutes. But despite that, their revenue did continue to increase. So there's potential that we could see strong growth into first and second quarter of this year as we see food service companies starting to open back up, and this could increase their demand for Beyond Meat. Then they talk a little bit more detail here in terms of the partnership. They say their partnership with McDonald's is a 3-year deal to make the McPlant. They're also working on a pork, chicken, and egg substitute, which could expand their profit line pretty substantially. We already knew that they were working on a chicken line to work with KFC. And then they mentioned Pizza Hut here, which is something that I haven't actually seen before. So their partnerships continue to grow, and it seems like they have a lot of potential for the future. The question is, how successful will all of these partnerships be, as they all seem to be in their infancy? Even they say they expect the impact of these deals to be fairly modest, but they also say that these are enormous deals, and that they are the biggest deals that you could possibly put together in the food sector. And then again, at the same time, they don't want people to get ahead of themselves. So they talk it down, and then they talk it up, and then they talk it back down again. And then they talk about PepsiCo again, where we're talking about plant-based drinks and snacks. Not sure exactly what that means. And then they mention the fact that they are a global company and that they did see revenue fall over the last quarter across the world, but they continue to expand in those markets where they are basically the only player in the game versus the United States where they compete with other retailers. And lastly, for this announcement, they did say they are going to produce a second type of burger patty, and they are going to be their juiciest burgers yet. One will be a lower fat concentration than the one that they released earlier, and the other one will be the same, but it's a newer version of it, so it'll be interesting to try those. So let's see what the Fool has to say whether this stock is a buy. They say most analysts will tell you that Beyond is overvalued, as only one analyst says that it's a buy right now. And even that analyst says that the price target is within 10% of where it trades, stating that the near-term upside is currently limited. And looking at the bear case here, they say this company is... And looking at the bear case here, they mention that Beyond Meat is good for the environment, and that the global protein industry is $1.4 trillion, and that there's quite a bit of upside potential for plant-based meats, and that this trend is still young and in the early stages, so anything that's in early stages can certainly change direction. Next, they talk about margin. The margin for Beyond continues to go down as there are more competitors coming into the market, and the plant-based meat is already pretty expensive compared to real meat, so they can't raise up their prices and expect to compete in this market, which pretty much keeps their margins pretty stable, if not trending down, which is certainly a concern for this company in terms of profitability. The stock already trades at 25 times trailing sales and over 1,000 times forward earnings estimates, which is obviously very expensive, and investors expect long, robust gains and growth. But again, you're buying the growth here, so you have to expect that they will fulfill all of these promises and that everything will go well. In terms of the case for buying Beyond, they intend to get their price for their product below the price of animal protein by 2024, and they don't expect their margins to suffer that much. They expect to do this price cut through the improvement of production, but of course that is yet to be seen. Over the past quarters, they were getting somewhere around 25% margins. It increased into 2020 and decreased into the end of 2020, obviously trying to bring their costs down in order to compete, especially in the down economy. They again reiterate the fact that the company is trying to undercut animal protein by 2024, and they will not reach this goal through the expense of margin. Currently, they only have $500 million in trailing 12-month sales, and there's a huge potential for growth into the $1.4 trillion meat industry. And I certainly see them taking some of this business at least, as they continue to expand into all of the retailers that I can think of. Every time I go to the store, I see their products, and their product line continues to grow, whether it's the sausages or the meatballs or the burgers themselves. Even ground beef I see in some stores, which is an indicator to me that they are continuing to grow. And this is not to mention the fact that their plant-based chicken is not commercially available, and their plant-based pork is not available in the United States, but it was available in China, so they have at least some product to sell there, but for some reason they haven't offered it in the United States quite yet. Moving on to the technical analysis here, you can see in September of 2020, we hit a high right at that $200 level. And then since then, we dipped all the way down to $120 per share, got a little rally, and then a dip back down to new lows at $115. And then we had the Pepsi announcement where we broke through that $200 level, filled the gap all the way back down to where we're at now, somewhere in this $140 range. And you can see we're up pre-market here on March 2nd, up to $148 per share. And this is the daily chart. So what I'm expecting here is that we're going to have a new trend starting. I expect this position to hold and that we're going to see this support come in. We're going to go up from here, at least in the near term. It's worth mentioning here that I do have the 9 EMA as well as the 30 WMA. And my 30 WMA is the red line here, which is above the EMA, which means this is a bear trend right now. But again, I expect this to hold and that we'll see this either flatten out through here, which will allow it to break through those moving averages to the upside. I'm not sure we're going to go back to 250, but I do expect this to hold. And looking at the weekly chart, all the way from March, it's been an uptrend anytime you're trading these longer term options, which I'm about to show you. So looking at my current position and beyond, I got a $289 credit to trade the stock at $130 per share. And then I bought the 115 put, so I'm risking $1,500 to make just under $300. Which is a great return. It's somewhere around 20%, assuming it goes well. And the stock honestly could go down another 17 points, and I would still be fine as long as the stock closes above $130 for this put credit spread. Currently in a very small profit of $11, but it's up pre-market, so hopefully we'll rally from here. I actually jumped in this position a little bit early. It did dip afterwards into the close of last week. And if we get another dip, it certainly could get a better position than this. But I expect the stock to go up from here, as I think we're going to hold support. In terms of price target, I see BYND going back up to the 175 level. I'm not sure we're going to go back over $200 per share right now. I think we're kind of getting a dip off of that Pepsi rally. And as long as we find support here, I think we'll make some higher lows. But I'm not sure we're going to make higher highs quite yet. We may channel sideways from here, which would be fine for me as an options trader. And if we get a rejection from a higher level, there's a potential I could sell some call spread just to hedge my bets on the downside a little bit more. But let me know down in the comments what your price targets are for BYND Meat. Or if you're not trading it at all, why not? Definitely like and subscribe if you got any value out of this video. My next video will be on Fundrise, as they are doing an internal public offering. So definitely make sure you like and subscribe so you don't miss out on my future videos. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.